in because of what I see happening in yields and because I think there could be more risk off. So
you mean short dollar yen?
Yeah, short dollar yen. Yeah.
Yeah.
Yeah. So what are you doing? What are you working right now?
Are you talking to me?
Gold.
Oh, I'm sorry.
That's all right. Come on in, man.
No, go ahead. I'll come in a minute. Go ahead, Ryan.
Yeah, well, I'm keeping an eye. We've got Canadian CPI coming up in a bit, and we're expecting CPI to be a little bit firmer than it has been. I know a lot of people in the room like me and Blake got the long dollar CAD, so we'll be keeping an eye on that one. It had a test of 140 overnight, and it's held a couple of times now. Test of 140, so technically it's playing nice, but we'll be looking for a softer number than expected to get us back on the way up.
Yeah, that could be corrective too. Where you're wrong, back under 9.5.
Yeah, back under there. Yeah, 40.
Yeah.
Yeah, that sort of area,
okay.
and it's turning a bit.
Well, these did, register over 80. I really, here's my tip for people that, follow divergences. If you can't tell with just your eyes looking at it whether or not you had a divergence or not, and you want to see the reading because you can't tell visually if RSI made a new high, forget it. It doesn't matter, because if it's that close, it's really, 1 point on the RSI. I don't consider them divergences. Okay. The ones that work are glaring. Okay. They're glaring. They're not, I need my cursor to find out if it happened or not. Okay. That's the tip of the day. All right. You don't have to check that out if you can't visually see it. So saving you some time. Okay. So, nat gas still percolating. Like I said, I'm going to be shipping some to you and your family, buddy.
Well, hurry up. We've had snow already.
Oh my God. It's not even well, yeah, that's early.
Yeah.
All right. So I mean, does Europe feel prepared with the energy they're getting for this winter?
Well, they've been stocking up, but the weather's been so bad, floods and whatnot coming, so you don't know what it brings and how long it lasts. You could have a mild winter after all that, or it could be a really cold one. So we've had obviously we've had more cable shenanigans going on between Lithuania and Sweden. Someone, inverted commas, damaged a cable in the sea again. So
again.
Yeah.
Okay. Yeah. All right. So I'm going to bring the chief in. Good morning, Blake. How are you, buddy?
Hey, good morning, Coach.
All right. What do you think? Yields come off? Do you think it's going to support risk, or is this island? What do you think?
Well, I mean, yields are coming off because of what happened, the headlines overnight from Russia, right? I mean, that's why bonds are up, yields are down.
Okay.
So are they going to recover today? Everybody's talking about that they updated their nuclear doctrine but it was kind of hinted for a while, so it isn't it isn't like the hugest surprise out there. I think that's why there's not a huge reaction either. But that doesn't mean that the escalation isn't picking up. And, because obviously, the missiles that Ukraine's using our missiles and whatnot. So, when you ask me about yields, it's like yields may come down, but what does that mean for risk? That doesn't necessarily mean that stock or like the dollar is going to go down. The dollar could very easily, start really rallying because even with yields down, because this is a catalyst that's driving it. But as Ryan said, I mean, I don't know where in Russia, those missiles landed. I didn't read any of that information either. So, but here, I'll kind of show you what I was looking at here as far as yields go, because yields really were coming down to the rising trend line here. Let's pull it up real quick.
Can I say something about Ryan before you get going? You know, I was thinking about it yesterday afternoon. Not that you're always on my mind, Ryan, but that's a good song, by the way. Um, that you are really an high level trader, the way you blend what you see fundamentally and tactically. Really think that you're excellent, and
Thanks, mate.
I've seen hundreds. All right, Blake, you already know you're the best.
No,
You're the goat. You're the goat, man.
That's nice. Thank you. But I appreciate that. No, I think very highly of Ryan. You know, I always tell a story about Ryan before Forex Flow merged with ForexAnalytix. Um, there were three Twitter handles that I followed on Twitter that I got alarms for or notifications on, and Ryan's handle was one of them.
Yeah.
And yeah, so that just tells you how highly I think of Ryan. Now that I've worked with him for
and you muting me, what does that say?
well, that goes, yeah, I mean, yes. No, but
All right.
like for really it's that's what it says about Ryan. Now that I've worked with him for, you know, going on maybe 4 years, Ryan, I've changed my tune a little bit about you, and now I can't listen to you any longer. Just kidding. I actually I
Now
Flow show
you're
even when I get up in the morning. That's how much
yeah
Ryan's on my
yeah.
mind. So you think he's on your mind quite a bit. He's actually on my mind too.
Always on, yeah, always on my mind.
So
So
this
yeah,
is
that's a nice look, Blake.
yeah, this is the 10-year yield, and this is the 618 retracement. So again, we're here. Are
Yeah.
we gonna, you know, is this risk off going to pick up? Here's the other thing that I was looking at, which is very irritating to me. I bought the dollar Mexican peso yesterday. I bought it, you know, I bought it at 10 or excuse me, 2027. So I bought it right here as it was coming to the 2025, which is the previous all-time high, right? Or not
Yeah.
all-time high. It's the previous 2024 highs. Anyway, we were sitting right here. We closed down at like 2022, and I'm like, yeah, I'm just gonna get out of it for the night. I don't want to hold on to it. But the reason why I point this out is because it is
Yeah.
at its highs at the session right now. And this is one of those, you know, FX indicators that those of us that trade currencies, we
Risk
look at it
off.
and go, hey, wait a second, you know, the market's sensing a little bit of risk aversion, if you will. And that's what the dollar Mexican peso is actually telling us right at the moment. And then you take the yen, and I know you guys were talking about this, but I want to show you guys this is a ascending channel that I've been keeping an eye on. You know, I talked about it on the week ahead video. It's pretty important, and I reference this because I am long yen. I'm
Yeah.
short some of the yen pairs, not dollar yen, but I'm short, you know, I'm long yen against
Crosses.
currencies.
Yeah.
Yeah, on some of the crosses. And so this is significant to me as we're starting to roll over. I'm paying, you know, closer attention to this because it is signaling that we might see some risk aversion. And this is even looking past Ueda's comments from Sunday night or Monday morning
Yeah.
when he was talking about that, you know, I mean, he seemed, his comments really suggested there's not going to be another rate hike by the end of this year. So that's this strength that you're seeing in the yen really is more organically risk aversion grown, I guess you can call it that way.
Yeah.
So I'd keep an eye on it, especially if the dollar yen starts dropping towards 152. Ryan, I don't know what level you're looking at in the dollar yen, but I think that 200 DMA is going to be kind of important. Actually, I know, and I'll let you respond to that, but I know K-Man is back. He's just trying to get his internet up and running, and I know he tends to follow the Ichimoku cloud. I mean, you look at cloud support. It's not for quite some time. I mean, we'd have to dip way into the mid 140s to even reach the Ichimoku cloud. So anyway, Ryan, what levels are you looking at here in the yen?
Yeah, as I said, we got this 153.40 level, which we can't seem to close below or hold below. So that's a near-term level. Even with the headlines this morning, we got to 27.28 and then quickly went back above it. But yeah, under there, it's 152. which had a bit of messing around when we came up. It didn't really hold when we came up from the lows. But then on that last test before we had this move up to 155 odds, 156, it held. So yeah, 152 is the next level below there. But as you and I warn this to traders on the flow show, if we're moving because of geopolitical headlines, they don't give a monkeys about lines on charts. So
that's right, and that's something that I think you did make a point this morning on the flow show, and I think it's very, very important that everybody understands that when geopolitics come into play, yeah, you could draw whatever the hell you want. It's not even going to matter, not even one bit. That's why a lot of these, that's why the next 4 years are going to be so tumultuous for us as traders, and that's why my trading time frames are going to shrink quite a bit. When Trump is president, because he's going to be market moving. And when he, says, I'm going to do this and I'm going to slap tariffs on that, or I'm negotiating with this person or that country or whatever, these moves could be vicious and they'll run right over your technical levels. So you got to be a little bit more sensitive.
Be careful going into weekends if we've still got this hanging over us as well.
Yeah, absolutely. Hey, we've seen a bit of a recovery in the euro, which I find fairly impressive. I'm short some euro dollars. I shorted it yesterday, and I was up.
Here we go.
This is previous support, current resistance. I'm looking at it as a flag, and
I know
it from the flag top, and we came right down to support, and then we bounced obviously out today. Yeah. I mean, the euro is trading heavy, but it's
just starting to uptrend off the 105 though.
Yeah, I mean, this is pretty big support. I mean, I'm trying not to get. I'm not very aggressive, by the way. I mean, it's one of those, like, I should have just taken my 40 pips when I got up this morning off of it, but it is still. I mean, for all intents and purposes, we're at some really critical support. I know, Dale, you're like, it has a destiny of trading down to 102, and I that's like my area. If we get down to parity or 102, I think me, you, and your grandma's, mother's, uncle's, friend's monkey is going to be trying to buy the euro somewhere down here. And
it's ARP approved because of the low volatility in currencies. AARP will allow us to trade currencies.
Is that it? Is that what it is? Okay.
With our retirement account.
Yeah, there you go. You can trade euro in your retirement account
in my cash. IRA. Yeah.
It's not going to give you a heart attack. Well, really, really key support right through here, obviously, as we completed that AB's, the equal leg move, if you will. Kiwis, right off a pretty key support. But, I want to actually point this out. If you look at the Kiwi, the underside of this broken trend line, we're just kind of challenging it right now. And like I said, I think some of these pairs are starting to exhibit some risk aversion. One of the other things I wanted to talk about, if you watch the week ahead video, I give 3 trade setups every week, and then the next week I review them. I go, okay, well, what did I say and what happened? This weekend, I said, hey, if we get a move back above 5,900 in the S&P, it's going to be a decent level to be on the short side. And yesterday we got above 59.10 or right around 59.10. We're rolling over, but this is a little bit of a bear flag that I think we need to keep an eye on, because if we start breaking yesterday's lows, which is not too very far away, just about 20 or 30 points away, we're gonna be challenging what I call the major line in the sand, which comes in around 5,700. This is where shit gets real. I mean, if you're long and you're buying post-election and we start getting back below there, you're obviously wrong at that point. And that's the point where I think people are going to start looking around going, shit, I don't know if I really want to be long equities anymore. But there's a lot of work to do to get there. But I do want to point out that we're still in a very strong uptrend. I just think things might get a little squirrely if we start
buying climax. Katie Stockman.
Yeah,
Buying
she was
Climax.
she was talking about that, wasn't she?
Yeah, and you know what, Blake? This break here in the S&Ps, you know, when you think about it, I heard and interviewed quite a few people who said, I'm stepping aside for the election, okay? And I'll get back in after. So the pain trade actually was what happened because many people stepped aside. Then they had to chase it on election day. And maybe they had a couple of days where they were okay. But I think there's a lot of people trapped on Gilligan's Island because if you pull up a SPY, you don't see the gaps here. I saw Jim featured it in his letter, but I talked about it with him first. All right. So that's an island top that you just showed. There you go. See the gap down?
Yeah.
So up there you have, you know, Gilligan and Marianne. Let's not forget Marianne and Ginger and
Oh, I love Ginger.
the professor. I liked Marianne better. And if they don't fill that gap, like you know, it's a rare formation in Island. They don't happen a lot.
Yeah, there you
So
go. There's your island top right
so
there. So
I'd be cautious. And Mr. Howell, they tried to send a rescue boat yesterday, right? Because Mr. Howell can't reach his broker. So
Dale,
I hope,
Dale, Dale,
huh?
I'm gonna extend a branch to our viewers and realize that there's very few of them that actually understand what the hell you're talking about right now. I do, because I used to watch Gilligan's Island when I was a kid, back in the
Well, you
80s,
know, Google it, guys, if you haven't watched Kill It. Go
Saloom says it's boob top. No, yeah, no, it is
ahead.
kind of, yeah, the Gilligan
Yeah,
Island ginger top, maybe.
yeah,
Anyway,
yeah.
I digress. So let's talk about the Canadian, and I know we're above 140, Ryan, and you and I are playing this to the long side. I have to say I was impressed about the dollar strength that we saw yesterday. It was across the board. I mean, we saw you know, the euro really take off from 105, and you know, the Aussie and the Kiwi rallied quite substantially. The dollar CAD pulled back. We're still above 140, but I can't ignore the fact that this looks like a, you know, it could look like a bear flag pattern, especially if Canadian inflation is strong. What are you expecting out of Canada today?
Well, the markets expectations are for CPI to go up to 1.9% from 1.6, but the other measures to stay a bit sort of unchanged, a bit stickier. So yeah, I mean, you know, if it is a hot one, then we're probably going to go back through that 140 for a bit. Does it change much? We're pricing, I think, at the moment 30 pips of cuts by December. A lot of banks expecting a 50 again. So, but if it's a soft number, then I think we're going to push up higher. But if we get a high move in dollar CAD today amid this risk headline, I think I'm going to close a bit more of my longs because I want to get over this hump before I think dollar CAD gets back on the bull train.
So Mark in our chat room, he posted this, and you're looking at the Bank of Canada right here. You know, so the probable move is a cut, and it's 100% possibility. But if that inflation data comes in hot, what do you think? How do you think that's going to change?
I don't think it will change much, but as you see, the implied basis point is over 25 pips. You know, at 32, so we're sort of sitting in between 25 and 50. Well, a bit more to the 25 side. So yeah, that will come down to a more like a 25, but I don't think it will change whether they cut or not. Those expectations.
Got it. Now, guys, if these are conversations that we're having in the ForexAnalytix chat room. You can see there's a lot of side conversations that go on too, inside here as well. So if you guys want to be involved in the ForexAnalytix community, remember it's only $1 for 10 days, and then you get all these tools and analysis of 30 different products and live squawk feed, and you know, the data flash, be in the chat rooms, and you can chat with all of us and all of us traders around there too. So let's, you know, here's the other thing I want to talk about the dollar CAD really quick before this news comes out. Here's a Canadian yen, and it's a chart I posted in the chat room. We have a big, big longer term channel, but we have this minor channel too. You can see it right here. And today we hit the bottom end of that channel. Now with the yen gaining a little bit of strength, if inflation comes in, not so hot, there's a good chance that we could take out this support here. And if we take out that support, the other thing is you can see that we could really kickstart a bigger pullback, because this is basically a 24% retracement. So you're talking 38% retracement takes us to 108 and a quarter. 50% back is 107.20. So these are levels. If the Canadian continues to stay weak, it's something that you should pay attention to, especially with the market becoming a little bit more risk averse and the yen picking up a little bit of steam here. So it's something that I think we should all be paying attention to. Matter of fact, we are less than a minute away from the data. So let's, I'm just going to keep the Canadian right here, and let's see what the reaction is to the data. And we have some housing starts too in the US and building permits we should also be paying attention to. Anything you want to, any last minute comments here, Dale?
Yen's going to break down. So any support you have underneath it.
Strong data, strong CPI. Sorry, Dale.
Okay, so that's okay.
Yeah, hot right through. We just went right through the 140 level in the dollar CAD. All right. Yep. We slipped through the 140 level. Let's see if we can hold down there. Yeah, nice slippage of the dollar CAD. Let's see if buyers step in through 140 as well. And I'm sorry, what were you going to say, Dale?
I just think that the yen, regardless of gyrations here, is looks like it's going to break down and try that 49 area, 50 area, something like that. I wouldn't be long yen.
Okay. Well, we will all be paying attention to that one for sure. Now keep in mind, regarding this Canadian, the big breakout point I think is going to be the 139.80 level, which we're getting close to. That was the previous 52-week high, so we're getting close to that as well. And with that being said, I want to thank you, Dale, for guiding us today, and I'm going to pass you over to your interview.
Okay, thank you, Blake. Arnaut, will you please accept the promotion? I promise I'll demote you at the end of the interview. All right, buddy, there you go. Thank you, Blake. Ryan, guys, thanks very much. All right, have a great day in the room. Get in there and join these guys. Arnaut, welcome back.
Yes.
How's your pup?
Much better. Now my cat is sick.
Oh, the kids, huh? There's always something going on with the kids. So
yes.
So it's
I'm a cat. My cat is sick, not my dog. My cat.
Oh, it was your cat. Okay.
No, it was my dog yesterday. And today it's the cat.
So it's raining cats and dogs. So
right.
Anyway, yes. They're the best to have in your life.
What are you gonna do?
Do they think that we put in a significant high with the buying climax after the election, your cat or your dog?
It could be. Yes, it sure could be.
You're going to share your screen, bro?
See. Yeah, I am. Sorry, I was not clicking on the right.
So we have a process to go through here.
We do. Yes, we do. So I think you want to talk about the S&P 500, right?
Okay.
Yeah.
And, whatever's on your, whatever your higher conviction counts are.
Oh, okay. Yeah. That I would honestly straight go to Bitcoin. But okay. Let's start with the S&P 500. And just as we heard a couple of minutes ago, it's always good to reevaluate, what did we say or what did we analyze a couple of weeks ago. I think I was on your show 2 months ago, somewhere around there.
Yeah. Right.
And I was looking for about 6,100. I think that was my forecast, with a little bit, of course, ups and downs in between.
The whole universe was looking for 6,100.
Oh, yeah, that's right. Everybody was.
I mean, that was a count. Actually, there were so many ways to come up with that number, even simple technical analysis. The breakout at 4,800
was
1,300. So here's what I think. when I've seen this a lot. Whenever the whole universe is looking for one number, it either doesn't get there or it cuts through it like a hot knife in butter.
It could,
So we
yes.
got pretty close.
Yeah.
60-40 was
Yes.
pretty close.
Yes. And I think there's still a little bit more gas in the tank, but we might go through a little bit of a rough period. I think that the Trump trade after the elections is done for now. It's priced in by the market, which I think is just pure of a certainty perspective. I think if Kamala would have been elected, we might have had this same reaction. It's just certainty for the markets, right? The market doesn't like uncertainty, and you know, the polls and everything showed that the outcome was very tight. Well, unfortunately, the polls were wrong once again, and it was a landslide. So that gave, of course, the market a good sign to know what to expect, right? It's all about looking forward, and with now a new president-elect in the White House. The market can anticipate things and look forward, because all that's the market does, look forward. If Kamala was elected, I think the market would have also been excited, because then they knew what to expect as well. You know, 4 more years of what we just had probably. So that's pretty much what we have baked in the markets now. And from a bigger picture perspective, this is the weekly chart. I shared that with you and your viewers last time. We're kind of wrapping up this final fifth wave. That's where we were in last time, and we believe we're still in this one.
Well,
you know,
what made you change your count from 6100 to 6240?
Because we're in a ending diagonal. Back then,
okay.
We couldn't, of course, know yet that we would be in an ending diagonal.
Okay, got
but
it.
the overlapping price nature suggests we're still missing a last green wave 5 here. And I'll show you some other indexes as well. The NASDAQ 100 very clearly. We're still kind of missing this green wave 5, and most likely we're in this green wave 4. And you know, 2 months ago we couldn't know it. We were like, well, if we just use standard Fibonacci-based impulse patterns and all that stuff, we're kind of targeting 6100, and we haven't reached it yet. So I still think we have a destiny with it. So if we zoom in, this is the daily chart. What I just showed you was the weekly chart. You can start to see this ending diagonal pattern here. It's quite overlapping. It's what we call all ABCs. And if you would go to an ending diagonal pattern, I describe it here on my website, and zoom in, it starts to look like this. Some people call it a wedge, other people call it a triangle, and it's an exhaustion pattern. And it's, if we would go, for example, to the NASDAQ, you can almost see it here as well. We're still trans-channel surfing, but also here we're still missing a larger fifth wave. So back to the S&P 500. So the market has two options. Either we're going to tag on another ABC higher. It's going to target about 60-61, which would be ideal, because normally the third wave here in red instead of green, yeah, it's a little bit potato. Sometimes my labels change between counts. It's just all, you know, at the end, it doesn't matter if you label it a large wave or a smaller wave, as long as you know it's the end of a third wave and we're in a fourth wave. I think that's the primary message. So we cannot yet discern if we're going to see one leg higher, which would be really nice, because a 0.764 extension of this Trump rally would get us to 60-61, which would be equal to the 1 degree higher 0.764 times A as well. So this would be wave A, this would be wave B. October was wave B. And then we're now in wave C, which is subdividing once again. That's the problem with these diagonals. They're always subdividing till eventually they you know, exhaust themselves. And a very good example is in this chart as well, where we potentially just get maybe a little bit lower today, then a bounce, then back to about the high 5,000s, and then our final rally. Then this third wave fell a little bit short of its ideal target, but you know, hey, it's ideal, it's textbook. The market doesn't have to be textbook, yeah. And so here in orange, you see this large diagonal pattern, which is quite similar to the pattern we saw here in the beginning of this year, which was also a diagonal. And you can really see here this orange box. all the ABCs. And every time you kind of think, well, we have done an ABC up, the market can always tape on another ABC. That's the problem with diagonals. An impulse pattern is a little more clear. You have, you know, your wave 3, you have your wave 4, that type of stuff. Here you have this continuous addition of ABCs. It's very overlapping. So the forecastability becomes always a little bit less, unfortunately. But again, fifth waves are often diagonals, just as this February-March pattern was a fifth wave as well. It was the fifth wave of a third wave. And now we could be in the fifth of a fifth wave. Bigger picture-wise, we could start to top out quite badly. And I'll show you some other indicators that could start to point that way. And you can see here all the negative divergence we have on what is this, the relative strength, the MACD.
That's really bearish.
Yeah, that's bearish. And the money flow as well. And it's especially liquidity that drives markets. And you can see we're moving higher and less liquidity. This is the CMF, the Change in Money Flow indicator is declining. So there's less and less liquidity being put into the markets for whatever reason. And most likely it's larger institutions because they have, of course, the liquidity that are just kind of not putting in the money that they used to. And that's bearish.
Right.
But it's, I always say
Buffett, it's like Buffett.
Yeah. He is yanking a lot of money out.
He owns more T-bills than the Fed.
Right? Yeah, he does.
Yeah.
So that's bearish because liquidity drives markets. That is a very well-known fact. And on the other hand, these are all conditions, right? These are just conditions. The market can always rally real strongly and then take care of that divergence and it's all gone. So I would never use it as a trade trigger, but more as a canary in the coal mine. Canary in the wine.
I know what you were doing last night. All right.
Yeah.
I know what you were drinking last night. All right. Anyway, go.
Busted.
It's early, buddy. It could be. It could be anything.
Milk.
All right. Yeah. So this is 5 of 5 of 5 of 5 of 5 of 5.
I know, right? I know. That's the idea. It's the idea. It's not confirmed. It won't get confirmed until we drop much lower. And so what I use are warning levels. We're currently in a bull market, in a bullish sequence. All this divergence, aside, because those are just warning levels that are conditions that can always be mitigated by the market. Any divergence, be it bearish or bullish, can always be mitigated by a strong rally or a strong drop. So price is always the final arbiter. So for my members, I always place warning levels on the charts, below which warning levels is it less and less likely that we, in this case, get more upside. So ultimately, I still think this August low is key. Very key. So that's all the way down to about 5,100. We're currently at about 5,900. So the bulls have a lot of leeway because, yes, I think it's an ending diagonal, but maybe it's a leading diagonal, right? It could be one or the other.
You know what? I saw a count, and I'm an amateur. I'm dangerous with. I saw a count that says that we possibly topped here, and we could pull back to 4,900.
Oh, wow.
And then go to 75.
Okay. I guess it's possible. I don't see it.
I mean, is there any, can you come up with any kind of wave count that would, because a lot of people be calling it, well, I guess they need closes under 48. But basically, it would be testing the breakout again.
Yeah. Then you move it all the way back to the 21 high. I see there, right? That's about 4,900.
Yeah.
And about
and then go again,
spring and go again. Nah, it's going to be a tough one because I don't see it at the moment.
See it.
I have to look at it and get back to you in my next interview. Right now, I don't see it.
I just wondered if it might have been an alt of yours. What's your bearish count here? If it we don't achieve.
The most bearish count would be that we have indeed completed this ending diagonal. That the Trump rally was indeed the 5 of 5, the final one. That would be the most bearish one. But if I look here just at the NASDAQ 100, normally the NASDAQ 100 and the S&P 500 are reasonably tied to the hip. I'm still missing, as you can see, if this is indeed a diagonal, a 3, a 4, and a 5. If you look at this pattern, right? So 1, 2, 3, 4, 5, and then we apply that to the Nasdaq and the Nasdaq 100. I'm still missing a 4 and a 5. I do not see a large 4 and a 5 unless it's snuck in somewhere. Then I have problems with the wave 3, because then the wave 3 will be almost too short. There's just too many issues with thinking the market has already put in a big top. I cannot see, if I just zoom out like this, I just don't see 5 waves up. It's just a question, are we now in this wave 4, which could very well be, or are we going to subdivide a little bit higher for this wave 3? Potato, the wave 3 will go higher, and the wave 4 eventually will also move into a wave 5. Normally, the 5 of the ending diagonal targets 161.8. We haven't even gotten close. Normally, the third wave target is 123.6%. We got reasonably close. It would have been 21,500, and I think we got a little bit over 2,100, almost 21,250. So within the margin of error, okay, sure, I can live with that. If the Trump trade was indeed the wave 3 high, wouldn't surprise me. But bigger picture wise, over the next weeks to months, I'm still missing a final 5th wave. But again, if we start breaking below these price levels, I was wrong, and then we have indeed topped. And that's it. But so far, the market is not giving me any indication that is the case. We're still above critical levels here. Also on the daily chart, we did break. So the daily chart is, of course, shorter time frame. So the warning levels for the bulls are a little bit different. We haven't even broken below I think that is the late October, early November low here.
Yeah, that's right before the election. Yeah.
Right before the election. So that is at about 5,700, somewhere around there. We haven't even broken below that one.
Right.
Can we? Sure we can. Then we're kind of,
all right, say your preferred count works out.
Yeah.
Time-wise, do you have anything in mind to complete this? Do you think it'd be completed by Inauguration Day?
No, it's going to be after that. This is going to take weeks to months.
April?
To fill in. Yeah, that could be, for sure.
Okay.
Yeah, that I can live with. If I would have to put any money on it, sure. Not the inauguration. That would go too quick. That would. We have how many weeks left in this year for trading? 4 or 5, so 6.
Yeah.
No, that was 6 weeks. That's a month and a half. Then this 5th wave has to go really fast. I don't think so. I would defer it a little bit later. Yeah, March, April. So let's say April plus or minus 1. Just as you can see here, this wave 1 took about a month. The wave 3 here took 3 months. So then wave 4 should take about a month, right? Something like that. That already gets us into December. And then wave 5 should take at least probably a month plus. So yeah, somewhere around there. Let's say March. Yeah.
All right. Okay.
And I think from a seasonality perspective, we're going to go into a reasonably bullish period. But I must admit, seasonality hasn't really worked all that well this year. But oh well.
Do the island tops you're seeing bother you at all?
No, not really. We've seen them before. Yeah. I mean, it's okay. It's definitely from a short-term perspective. Yes, that's a bearish signal for sure. I mean, it's clearly, I heard you before, this is clearly an island reversal, right? We gapped up and then it didn't hold as support. And now we gapped down and are retesting the breakout that we got after the election. And there's, of course, a massive gap here that might easily get filled on this wave 4. We have this massive gap. It wouldn't surprise me, like you said before, a lot of people probably got trapped here. And that's max pain for everybody. That's the way the market operates.
Yeah,
right.
It does.
Yeah.
Such a mean guy.
Yeah.
So, was there anything else you wanted to talk about today?
So one of the other reasons why I'm not yet full on the bear train yet is if we look at the AD line. The AD line is also some sort of indicator of liquidity. And we did get some negative divergence between the October and the November high.
Yeah.
So that can forecast more pain ahead. If there's no negative divergence, for example, if we look here in July and August, we had no negative divergence. Actually, we had a positive divergence between AD line and the market. You'll see a resurgence and a new bull. Now we have negative divergence, but the negative divergence is on about a weekly time frame. And normally, if you would zoom out to really big bear markets, we need months to years of negative divergence. The 08 crash was foretold with months of divergence. The 2000 crash was foretold by months of divergence. The whole 50s and 60s was one long divergence till it eventually mattered. And of course, here all the way on the left, the crash in 1930 was also foretold by a lot of negative divergence, meaning price goes higher, but the AD line is not confirming it. And that we just don't see yet. We don't have it. So if every single bear market...
We only have a week when we need
months. A week to a month. That's about it. So that seems to be too little. So I'm going to keep an eye on this one. We had a long lasting divergence in 2022, by the way, but that one got erased eventually if we would zoom out. So as you can see here, the market had taken its sweet time to eventually break higher. The AD line in here in 21 all the way to 22 took a long time. It was one of the longest time frames since the 2009 crash to recoup all the losses in the AD line. And now we finally have a 1 month to 3 weeks of divergence. That's it. But bigger picture wise, that is most likely not enough. I don't know where the chart went.
Okay.
So that I definitely want to pay attention to. And I think once we start to see that, if we're going to see it, of course, there's no guarantee we will, then I think we should get more cautious.
Okay.
Going forward. But we're just not seeing it yet. So I would say hold your horses, bears, hold your horses. We're not there yet, but we have a first shot across the bow. Let's put it like that.
All right.
Otherwise, also, this is an interesting indicator. It's the summation index of the McClellan oscillator.
Right.
And it's getting pretty oversold. And every time it gets reasonably oversold, we're going to get good rallies. Not instantly. Sometimes you want to see positive divergence developing, like here in October, November last year. But I call it always the ebb and flow indicator. So we're currently ebbing, and eventually ebb will be replaced by a flood. And as you can see, it's been ebbing for quite a while in the market. And it also shows you that the recent rally we had after elections was based on negative market breadth, meaning there weren't that many stocks advancing. And I've seen a lot of people on Twitter pointing it out like, wow, the market went up, but very few stocks actually participated in that rally. Interesting enough. And it shows here in the data, but potential positive divergence developing. It's just, again, it's potential. It's nothing really to queue off on, but we're getting pretty oversold. Also, the SI, the summation index itself, is soon going to bottom levels if we keep on dropping. I think the futures are a little bit down tonight again. So this one is a little bit counter, right? So, but this is more of a shorter term indicator that suggests in line with, well, we might be wrapping up this wave 4. This wave 4 and then the wave 5, because eventually, of course, we cannot keep on dropping in this indicator. At some point, there's much more room left to the upside than to the downside, right? What is the path of least resistance? At some point, the path of least resistance is back up.
All right, Arno.
All right, that's a long.
No, yeah. I mean, really, especially thanks for sharing the internals that you pay attention to.
Yeah, I pay attention to it. Price always first. Price is the final arbiter. Things can always get much more oversold than we think. Price is the final arbiter. That's the trade trigger. These are all conditions. But if you align them, for example, with a wave count where you say, well, we expect probably a 4th wave that will resolve into a 5th wave, then this indicator tells you, well, yeah, at some point there is plenty of room left to the upside for this indicator. Okay. There's a lot other rally coming. Yes, that's kind of what
it's interesting you brought up.
Don't tell us when.
Yeah, well, it's interesting you brought up early December, because I have a lot of key dates around the 7th, 8th, right in there.
Ah, okay.
For a potential low.
Interesting. Wonderful.
Why don't you show people that want to learn your style of
Sure.
Elliott and what you do, where they could find you, and
Sure.
what kind of services you offer?
Yeah, so they can find me on intelligentinvesting.market. And we provide many types of memberships, anything from what I just covered, what we call the major markets. We do also ETF trade alerts. People get a daily email with short-term to long-term trade alerts for all the ETFs that trade the markets, from the SPY to the QQQs and the TQQQs, whatever you want. We follow, of course, the Magnificent Seven. If you want to trade Apple or Microsoft or Nvidia, these are mechanical trading systems based on price, momentum, strength, trends, and all that stuff, with a lot of variables going in. And sometimes they win and sometimes they lose. But in general, like Netflix, we've had a wonderful Netflix trade that's been long for quite a while. I think
what
the
are you
short
doing
term
with Apple right now? What's your position on Apple?
Oh boy, I'll have to look. I think short term we're
okay.
long, and intermediate term, I don't.
How about Google with the market making new all-time highs, Arno? Google only retraced a certain amount, put in a pretty negative reversal week last week.
Yeah,
Is
so
that
short
on
term.
a different count?
Yeah, short term we're Google. It's a very tiny short position. Also, that with trading and the ETF trading, we tell people what type of size of position, because if you're a strong uptrend and we get a correction, you don't want to full on short it. So short term it's short. Intermediate term, which is like weeks to months, it's still long. But it has already sold some of the original position that was bought a while ago. And long term, it's long since April last year. So that's how long it's only 25% of the original position left, because it sells into strength. So my systems are designed to sell into strength. So by the time the trend reverses, be it short term to long term, and hopefully you don't get stopped out, but by the time the trend reverses, you only have 25% left, so you don't have to worry. You can just sleep well at night. That's just house money.
All right. How about Nvidia? Nvidia going into earnings. What are you doing?
Oh yeah, so Nvidia, my system actually went long on the short term. No, it actually went short on the short term, but I warned that it doesn't take the earnings into consideration. So that's probably on the short term something you want to
just watch.
Probably not touch. I would wait on it. Yeah, it's always watch. Intermediate to long term, it's long.
Yeah,
it's been long for a while. So. And then, of course, we do Bitcoins. We have, of course, the Bitcoins.
Are we in wave 5 in Bitcoin here?
Yeah, we're just wrapping up.
We're wrapping
a third
up
of a third wave. A larger fifth wave, yes. So short term, we're looking at 6 digits. We believe Bitcoin is not. Yeah, something like that. Then a big pullback and then another rally. We think Bitcoin is not done yet for a while, but again, as we
probably till the market is.
Yeah, contingent. If Bitcoin's bullish most of the time, it means there's quite a lot of risk on mentality out there.
Right. Yeah, that's what I'm saying. Yeah.
Yeah, and
so
as
maybe
long as
they both could go to April.
Yeah, it could be. Yeah, it could very well be. Though Bitcoin, we're a little bit further out. We expect top somewhere late next year, based on previous tops when they occur. But again, it's all contingent on price holding above these warning levels. And as you can see, the warning levels are quite low. Before this super subdividing third of a third wave is over. But yeah, we've been bullish Bitcoin. I just checked since September 2022. So that was the first time we decisively turned bullish on Bitcoin. So most people are just finally jumping on the bandwagon, and yeah, that's the difference. We've been bullish for 2 years, right? That's the difference between us doing this as as our profession versus those that just casually jump in, pros versus amateurs. Nothing wrong with now becoming bullish. I think there's still plenty of upside left, but that's the difference. Though I must say, March through August was quite frustrating for us that follow price action so closely. I mean, Bitcoin went nowhere from March to August. That was very frustrating. Every time I thought Bitcoin
building that handle. for a cup and
Right.
handle.
Yeah, that was what we were building, and I call it a base. I said the longer the base, the bigger the breakout, and it has certainly not surprised. So that's good. We remain bullish on Bitcoin for sure. We've been bullish for 2 years. I think last 2 years ago we said 100,000 plus to 200,000, and look where we are now.
Yeah.
I remember I had people actually just canceling their servers October, just like 2 months before Bitcoin bottomed, because it was all POS and it would all go to hell and nothing would work and it's full of scammers. And yeah, they just leave right at the bottom, and let's turn that around.
It's a great contrarian indicator.
It totally
Your
was.
client base. When they get discouraged, you're right about to enter the zone.
Oh, no, true. It's true. It's absolutely true, and it's sad. And I tried to turn that around, but it's
well, then
impossible.
why don't you do this? People want to learn the secret of trading.
Yes.
And you know what the secret of trading is? There is no secret.
Correct.
It's hard work and living through adversity. And if you can't do that, find something else to do, if that scares you. So, maybe if you set people up and prep them for lower their expectations and say, is this risk capital? And when I was a broker, I would say, that check you're funding this account with? I want you to imagine striking a match and lighting it. And if that makes you nervous, it's not risk capital.
Right.
All right.
That's a good one.
That's a mentality that people, they might be trading with their mortgage money.
Oh, please don't.
Okay, I know. Well, maybe I know someone's looking for a housing crash this year. So anyway, we'll see. Maybe that's okay.
Yeah.
All right, buddy. Well, great.
Wonderful.
Great talking to you. Follow Arnout at Intel_invest on X and check him out. This guy knows his stuff, and as you can see, he can hold things. So there's one thing. It's great if you have a great call. It's better if you convert that call into a trade, but the best thing of all is if you could convert it into a hold.
Yes.
Okay. So
big time frames, big gains.
Yeah, there you go, buddy. So my trading warrior brother, Arnaud Teixeira, check him out. I wouldn't have been talking to him for years if I didn't think he brought value to the table.
Thank you. Appreciate it.
That's my endorsement.
We'll
All
take
right,
it.
buddy. All right, Arnaud.
Wonderful.
All right, take care, buddy.
You too.
I'll see you next year in the brave new world.
Oh, yeah. Sounds good. Yeah, let's see what that one brings. It's going to be interesting.
It will be, buddy. All right.
It will. Bye.
Thank you. That's a wrap, everyone. You enjoy that? Yeah. Ingmar liked it. Adam liked it. The people liked it. What about NVIDIA earnings? I don't know. Who do you think I am? AJ Nostra Pinkert? Huh? I'm not. Anyway, don't just count your pips, count your blessings. And see you tomorrow. Have a good day trading. Adios, everyone. See ya. Thanks, Hugo. See ya, Ingmar. Nostra Pinkert.